Hello out there. I'm glad you could join me, and thank you for being here. My name is Lee Boone, and I want to tell you about something that changed how I think about money, banking, and building wealth. The title of tonight's presentation is 16 Banks, and I promise you, by the end of this, you're going to understand what this means, and you're going to see your own financial life very differently. Let's get started. During my time in this industry, I sat across from a man who was very well off. Successful business owner, sophisticated investor, and he told me something that stopped me cold. He said, Lee, I have 16 life insurance policies. I thought he was joking, but he wasn't. He went on to explain that each one of those policies had 6 to 7 figures sitting in what's called cash value. Some of them had as much as $800,000 to $900,000. All of it accessible, all of it growing, all of his to use for anything he wanted, anytime he wanted. And here's what really struck me. He said, I don't have a savings account. I have an empire. That phrase stuck with me. An empire? Not one bank account, but 16? Hmm. Now, before we talk about how he did that, I want to ask you something. Where is your money right now? If you're like most people, it's in one of three places. First, your savings account. The bank pays you 0.5%, if you're lucky. Then they take your money and lend it out to someone else at 20% interest. They make 19.5%. You make 0.5%. Second, maybe you have a 401k or a 403b or anything of that nature, and it's locked away. It's subject to market crashes, and when you finally touch it, you pay taxes on every penny. And third, maybe you have equity in your home, but it's illiquid. You have to beg the bank to access your own equity, and they can say no. In every single case, someone else is in control of your money. Someone else is making the decisions. Someone else is profiting from it. What if you could flip that? Pardon me. Real estate investors figured this out a long time ago. You may have heard of the BRRRR method. You know, buy, renovate, rent, refinance, repeat. You buy a property, you put money into it, it appreciates. Then you borrow against that equity and use that money to buy the next property. And you repeat. That cycle, using equity as fuel to build more wealth, that's the foundation of generational real estate wealth. Now, here's my question for you at this moment. What if you could run the exact same system without the tenants, without the repairs, without begging the bank for permission, and without ever losing money when the market crashes? Because there is a way to do that. There is a type of permanent life insurance that is engineered to do exactly that. Now, I'm not talking about the life insurance your employer gave you. That's not what this is. This is something entirely different, and it's been quietly used by the wealthy for decades. Here's what it does. Your premium goes in, and instead of the insurance company keeping most of it, your money builds an asset that you control. Not them, you. That asset grows even in years when the market crashes, even in 2008, even in 2020. It keeps growing, and you can access it anytime, for any reason, without any application, without a credit check, without begging anyone's permission. And when you're gone, it transfers to your family completely tax free. Here's the thing most people don't understand about life insurance. Not every policy is built the same way. A traditional policy, the kind most agents sell, most of your premiums go towards the death benefit. Very little bills as cash value. It's designed that way on purpose. But a private banking policy is engineered the complete opposite way. It's structured to a very specific threshold set by the IRS. That threshold is unique to every individual, and when you hit that threshold just right, the maximum amount possible flows into your accessible cash value instead of into insurance profits. Most agents don't know how to design this. They're not trained to. So they sell you a traditional policy. You get less than you should. But when you work with somebody who understands this blueprint, everything changes. So let's talk about how you actually use this. Okay? Imagine you have a line of credit that works like this. No application required. No credit check. You don't qualify or disqualify based on anything. It's just there. If you need capital for any reason, you access it. You borrow against what you've already built. And here's the part that makes people lean in. If you don't pay it back, there's no penalty. There's no collection agency calling you. There's no credit bureau hit. Nothing happens except the outstanding balance is settled against your death benefit when the time comes. Now, compare that to a traditional bank line of credit. They can freeze it, they can revoke it, they can say no. And if you miss a payment, consequences. So which one would you rather access to? One of the things that separates the wealthy from everyone else is this. They don't panic when the market crashes. And I'll tell you why. Their money is structured so that it doesn't go down when the market goes down. Your private banking policy is linked to a market index. So when the market goes up, you participate. You get real growth. But when the market crashes, and it will crash, your cash value doesn't crash with it. You simply get zero growth for that year instead of a loss. Look at 2008. The market lost nearly half its value. People lost everything. But policies structured like this stayed flat. They protected every gain that had already been built. Same thing in 2020, the COVID crash. Market panic. These policies were flat, protected, safe. The stock market gave people nightmares in 2008. This gave them a nap. Now I'm going to tell you something that sounds too good to be true. So I'm going to say it clearly, and I want you to really hear this. What happens if you borrow money from your policy? Let's say $100,000, and you never pay it back. Well, the answer is nothing catastrophic happens. The outstanding balance plus interest is simply settled against your death benefit when you pass away. That's it. There's no collection agency, no credit bureau, no foreclosure, no penalty, no angry phone calls, nothing except a simple adjustment. Now, let me ask you this: name one bank in America that will give you those terms. Name one, because you can't. Because no bank would ever agree to do that. Only your own policy, your own personal banking system will ever give you those terms. So, what do wealthy people actually use this for? Real estate investors use it for down payments on their next property. No waiting for loan approval. Capital is ready. Business owners use it for operating capital, for inventory, for opportunities that wait for a bank to say yes. Some people use it for major purchases or and structure it so they pay themselves back instead of paying the bank. Some use it for emergencies, you know, medical bills, job loss. Instead of raiding their 401k and paying penalties, some use it for opportunities. A business deal shows up, a property appears. They have capital ready on their terms, not the bank's timeline. And some use it simply for retirement income. Tax advantaged, yeah, yeah, tax advantaged income on their schedule. Not waiting until 59 and a half, not taking distributions they don't want. The question is never if you'll need capital. The question is, whose bank will you use? So here's the story. Here's where the story gets really interesting. The man I told you about in the beginning, he didn't have just one of these policies. He had 16. 16 separate policies, 16 separate lines of credit, 16 separate stores of value. Each one had 6 to 7 figures in accessible cash value. Some had as much as $800 to $900,000. You do the math. That's roughly $1.6 million in capital he controlled completely, at a minimum. Capital that grew, capital that was protected, capital that he could access on his terms. And each policy is completely separate. If he borrowed heavily from one, the others kept growing untouched. One policy is powerful. 16, that's an empire. Now, here's the thing people don't always think about. Even after decades, even after borrowing from policies, living from them, spending against them, there's still a death benefit, still wealth to transfer, still something for the next generation. Think about that. You spent from it your whole life. You used it, you accessed it, and there was still something left. Most financial strategies force you to choose. You either live well now or leave something behind later. A properly engineered private banking policy refuses that false choice. It's designed to do both simultaneously. That's not just a retirement strategy. That's a wealth transfer engine that never turns off. Now, I want to be clear, this isn't for everyone. This works best if you fit the profile. Do you have consistent income? W-2, self-employed, business owner. As long as it's consistent, this can work. Are you between 30 years old and 65 years old? In reasonable health? Are you tired of your money sitting in someone else's institution, making them rich while you get pennies? Do you want access to capital without begging a bank for permission? Do you want tax advantage retirement income on your schedule, not the government's? And do you want to leave something behind and live well getting there? If you're checking those boxes, we should talk. You don't start with 16 policies. No, 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 no. You start with one. And the journey looks like this. Step one, we have a strategy session. We sit down, we look at your income, your goals, and what you can realistically allocate. We build a picture of what's possible for you. Step two, we custom engineer your private banking policy. And I want to emphasize the word custom. There's no such thing as one size fits all policy here. Yours is engineered to your specific situation, your income, your goals, your IRS threshold. In step three, we fund it, open it, and your cash value begins building from day one. The man with 16 policies started with one. The best time to open yours was 10 years ago. The second best time is today. So here's what I want to invite you to do. If what I shared with you on this day resonates with you, if you're curious about what this could look like for your specific situation, I want you to schedule a complimentary strategy session with me. This isn't a sales call. It's a discovery conversation. We're going to talk about your situation, your goals, your concerns, and I'm going to show you what this could look like for you specifically. You can book that session by scanning the QR code on this slide right here. You can visit for more information in general about Buckeye Financial. You can go to www.buckeyefinancialllc.com and let's have that conversation. My name is Lee Boone, founder of Buckeye Financial LLC. I am licensed in Virginia, Maryland, North Carolina, South Carolina, Arkansas, Texas, Ohio, and Tennessee. I was a defensive back for the Ohio State Buckeyes, member of the 2002 BCS National Championship team. Coach Tressel taught me that preparation and execution aren't just values, they're a way of life. And I've spent 20 years helping build people's financial systems that work for them, not against them. I don't just teach the playbook, I lived it. And I would be honored to help you build yours. Thank you, and I'll talk to you soon.